We've done something pretty extreme, and we don't know how bad the troubles will be, whether we're going to be like Japan or something a lot worse. And I think we do know we're flirting with serious trouble.
Charlie Munger and the Daily Journal Corporation held their 2022 annual shareholders meeting. This is basically a 2-hour Q&A session with Charlie. In this shareholder meeting, Charlie answered a lot of questions on different topics, but one of the hottest topics in this session was the current money printing and inflation that the US is experiencing. Here are some of the things that Charlie had to say about inflation.
From Simon Jacobs, who says, conventional economic theory argues that excessive monetary and fiscal stimulus over the last 2 years has triggered the highest inflation in 40 years. Do you broadly agree with this thesis? And more importantly, do you think there will be a high economic price to pay as the Fed attempts to bring inflation back under control? I guess the reasons for it.
Well, the first part, I agree with it. We've done something pretty extreme, and we don't know how bad the troubles will be, whether we're going to be like Japan or something a lot worse. And when you print money on the scale that modern nations are printing it, Japan, the United States, Europe, etc., we're getting into new territory in terms of size. The Japanese bought back not only a lot of their own debt, but a lot of their common stocks. So the Federal Reserve System, you can't imagine how much money printing Japan has done. And they haven't had all that much inflation, and it's still a very admirable civilization. In fact, you could argue that Japan is one of the more admirable civilizations in the whole world. And in spite of all this very extreme government money printing they've done, and they haven't had terrible consequences. Now they've had 25 years of stasis with living standards not improving very much. I don't think that came from their macroeconomic policies. I think that came from the rise of tough competition for their export powerhouse from China and Korea. But at any rate, it's weird what's happening, and nobody knows for sure how it's going to work out. I think it's encouraging that Japan can print as much money as it has and remain as civilized and calm and admirable as it has. And so I hope to God the United States has similar happy outcome.
As you heard from Charlie, he shows some concern when it comes to the money printing that the US and other countries in the world are doing right now. He also talked about the massive amounts of money printing that Japan has done, and if the US might be worse than Japan. Japan bought back a lot of their own debt and their own stocks. Despite all this, Japan has done fairly well, and Charlie sees Japan as one of the most admirable civilizations in the whole world. Although Charlie is concerned, he is not sure of how this will end.
What makes life interesting is we don't know how it's going to work out. I think we do know we're flirting with serious trouble. I think we also know that some of our earlier fears were overblown. Japan is still existing as a civilized nation, in spite of unbelievable excess by all former standards in terms of money printing. There's never been anything quite like what we're doing now. And we do know from what's happened in other nations, if you try and print too much money, it eventually causes terrible trouble. And we are closer to terrible trouble than we've been in the past, but it may still be a long way off.
What are your current thoughts on the inflationary environment? And please compare and contrast it to the 1970s.
Well, when Volcker, after the 70s, took the prime rate to 20% and the government was paying 15% on its government bonds, that was a horrible recession. Lasted a long time, caused a lot of agony. And I certainly hope we're not going there again. I think the conditions that allowed Volcker to do that without an interference from the politicians were very unusual. And I think in 2020 hindsight, it was a good thing that he did it. I would not predict that our modern politicians will be as willing to permit a new Volcker to get that tough with the economy and bring on that kind of a recession. So I think the new troubles are likely to be different from the old troubles.
This is related. These are all.
You may wish you had a Volcker. You may wish you had a Volcker-style recession instead of what you're going to get. The troubles that come to us could be worse than what Volcker was dealing with, and harder to fix.
Charlie also mentioned that you don't need a lot of diversification when investing, even if inflation is high. He said that you are lucky if you have 4 good assets and that those 4 assets is more than enough.
How will this all play out, and what's the best advice you have for individual investors to optimally deal with the negative impact of inflation other than owning quality equities?
It may be that you have to choose the least bad of a bunch of options. That frequently happens in human decision making. And the Mungers have Berkshire stock, Costco stock, Chinese stocks through Lilu, a little bit of Daily Journal stock, and a bunch of apartment houses. Do I think that's perfect? No. Do I think it's okay? Yes. I think the great lesson from the Mungers is you don't need all this damn diversification. That's plenty of. You're lucky if you've got 4 good assets. I think the finance professors and that sell the idea that perfect diversification is professional investment. If you're trying to do better than average, you're lucky if you have 4 things to buy. And to ask for 20 is really asking for egg in your beer. It's very few people can have enough brains to get 20 good investments.
That's it for today's video. I hope you enjoyed it and learned something new. Make sure to like this video and subscribe to Compounding Club because it helps out the channel a lot. Thanks for watching the video, and I'm looking forward to speaking again soon.